The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And what's going on, guys? This is Dan French. This is the French Workbench Podcast here on a Thursday. We have a nice show here today. I got my good friend here, co-host Brett Jenny in studio. Also, Rob Friesen's back. He's going to talk a lot about what's happening in the stock market, the Fed raising rates, and as far as the Fed's fund rate. So let's get right into it. What's going on with you today, Mr. Brett Jenny?
Crazy day, man. Lots going on. Crazy day with crypto. Crazy day with the stock market, as Rob can attest. So
Rob's going to talk about that.
Yeah. So just lots of stuff going down, man. You know, the market went down, and Bitcoin was down about 8% at one point today. I think right before we started, a few minutes ago, it was at like 6% down. So it's the whole market pulling back up that everyone thought was going to do is kind of on stall right now.
What's going on with you today, Rob? How you doing, buddy?
Good, thanks. Thanks for having me on the show.
Yeah, man, appreciate you coming in. So let's talk a little bit about what's happening. First off, we're going to talk with Brett, and we've been talking a lot about just in general what the stock market is doing. I want to talk a little bit though about what's happening with cryptocurrency, and you can kind of talk about this too, Rob, because a lot of people want to know what's happening in the crypto world, also what's happening in the stock market world. It seems like a lot of these markets are really suffering right now. Housing market, stock market, crypto market. It just seems like across the board, the big markets that we typically see or deal with, that they're really struggling. So what is your situation here, Brett? I mean, you look at crypto.
Yep.
And why would somebody invest into crypto if they thought about it at this point? Or are they trying to time it out just like they would like the housing market or the stock market?
I would say don't try to time it out, because if you're going to do that, you're probably going to lose 10 out of 10 times. And I can tell you firsthand. I mean, that's kind of how I got in the market. Was 2017 was I bought Bitcoin when it was like 18 or 19,000.
Yeah.
And then it spent the next 3 years going down to 3,500. And it doesn't do it overnight. So you need to take a big picture mentality of it. That's where it may be a little bit different with stocks, although I'm sure with a lot with stocks, it's kind of a long-term picture as well. But the manipulation and the fluctuation in price for crypto, like I said to Rob earlier, I saw Bitcoin drop like $3,000 today in a matter of like an hour and a half, 2 hours.
Yeah.
So if you're going to buy it, I would buy it to hold, maybe take 10, 15% of it and play around with it to try to do, some trading with it. But in my experience, and anybody who has been doing crypto for a while will all tell you the same thing. They're the world's worst trader, and just buy and hold. And times like now when it goes down, if you believe overall it's going to go up, now's when you buy.
What do you think about that? Because look, I want to talk with you, Rob, because Rob, a lot of people don't know where to put their money. There's not a tangible asset, if you want to call it, even though we know the confidence in crypto is there. So what do you think? I mean, would you say that it's a good time to invest into cryptos now, or would you wait? I mean, I don't know how much you deal with crypto. Well, what are your thoughts?
I mean, I watch Bitcoin, as a leading indicator or as part of the suite of indicators when you're trading. So it's definitely part of information gathering and so on. So I think what people have to settle for themselves is, why do you believe in an asset? Like if we go back to real estate, for example, Mark Twain said, whatever you do, buy land, because God stopped making it.
I like that.
So, I mean, like, you got to think about, why do you want to invest? What is the principle? What is the foundation behind it? And until you settle that, you're going to be victimized by many, many factors.
Yep.
Okay. And you might get lucky and you might not. But the reality is the Fed has taken away the punch bowl. So that means that all risk assets are, have to be viewed in a new light. You don't have that same support for taking risk that you had before. And especially if you've already borrowed a lot of money to, take advantage of the bull market and you decided to hold, you might be trapped. You might have, increasing payment pressure, all kinds of stuff. If your house value goes down for some reason, you're under pressure that way. And rising prices. I mean, it doesn't matter what you look at. And there's a lot of the inflation numbers don't have everything factored in that people are dealing with in the real world, right?
Yeah.
So
let's look at I want to say about the impact on this. The impact that when you raise the Fed's fund rate as a short-term bond, right? And so they're slowing the economy down. They're talking about raising this rate hike even more, right? Maybe possibly 2 or 3 more times this year. Ultimately, they're going to slow the economy down and take money out of circulation. Is that really what they're trying to accomplish with this, with the inflation? What are your thoughts on that?
Well, I mean, you go back to what Volcker did in '81, and he raised interest rates really high, over 10%, and that put a stop to inflation, quite quickly. So the Fed wants to take a more gradual approach, but there's a lot of comments and criticism that they're behind the curve, that they're too slow and they're too lagging data sensitive or influence. So the fact is that they may not be able to reel it in with this slow and steady wins the race approach.
I've heard that too. What's your thoughts on that personally, as far as the Fed's job? I mean, I've heard that across. Go ahead. Sorry.
You can go back to a show that I did in May of last year, and they first started using this word inflation is transitory, and I said hogwash. Hogwash. When you understand how much money has been put into the circulation in the system, and where real inflation comes from at first, and that's the debasing of your currency, which is what an argument for Bitcoin obviously is. But the thing is that you take that, and then we had the supply chain problems starting to really ramp up all through the summer, and then it started to really become more the narrative in September and October of 2021, right? But that word transitory, when it was first used, that's hogwash. When you look at the big picture of things. So now they're admitting that the transitory thing is kind of off the table, and this is going to be longer than we thought, and we're going to deal with it, and we will be successful, blah, blah, blah. But how do we know?
Well, where's the movement at right now in cryptocurrency? Because I want to know, this was a big thing, especially after COVID. Everybody. What
do you mean? Where's the movement right now?
Where's the movement in the markets for crypto? Right. I mean, is it moving? Because I want to talk to you because we were trying to discuss also too about this.
Yeah, it's moving down right now. So the thing about cryptocurrency, especially Bitcoin and stocks before, was up until probably the last year or so, they never necessarily coincided and ran side by side with each other. As far as if the stocks did something, cryptocurrency didn't necessarily follow along with it and all that stuff. But now that we've had so many institutional investors in the past year and a half, you're very much seeing kind of what happens with the stock market is at the same time happening with cryptocurrency. So earlier this week, stocks were on the downslide, cryptocurrency was on the upside. And everyone said, oh, well, now they're starting to separate. But obviously after today, they're in common ground with each other.
Yeah, I find that they move more correlated than should. If they were truly an alternative asset.
You're absolutely right. They never used to, and now they do, is what I've noticed in the past year or so.
So then how can you say that that's not a risky asset then? I mean, because you got to think that I've talked to a lot of people that had money in the stock market and they lost a lot of money. Also in crypto, right? They pulled out, but you're seeing people now having nest eggs and things like that. And then there's a big divide. It's like, hey, should I put my money in the stock market at all?
May I answer that?
Yeah.
Okay. So I think, again, it goes back to people have to settle in their mind what they really believe about Bitcoin and the other coins, and what that means to them for the long term or the short term. They have to settle that, because I don't believe you can just hear from somebody and then just jump on board just because somebody said so. You've really got to own your own research and due diligence. You have to understand why you're there. So to me, it could be like if we go back to, let's say you were a Russian citizen and you were concerned about your currency plummeting at first, you might say, hey, while I still have a chance, I'm going to take and move as much as I can to Bitcoin as a hedge or as a protection, right? So there can be use cases for it like that. And if that's why you believe you want to own it, well then, go ahead and do that. If you think that it has an intrinsic value on its own, it doesn't. I would rather be in, a Caterpillar or some kind of stock that pays a dividend, so that even if it goes down, I still get paid for holding it. And if you think about it like this, if you go to a car auction, you're going to want to know what the book value of that car is before you start, putting your hand up in the auction.
Right.
And in the same sense, you should understand what the book value of a stock is, and what kind of dividend yield you can get for holding it and things like that. So all these stocks, like I mentioned last time on your show, all these stocks that have no earnings and say we're going to earn money in 2035.
Yeah.
Okay. Well, that may happen. It may never happen. That's more speculative.
Yeah.
But if you have a stock that has tremendous revenue and pays a good dividend and is a nice big blue chip conglomerate, whatever, even if that goes down, you still get paid something for holding it. Yeah. So we don't have that with Bitcoin. We don't have any intrinsic value. We have a use case. So if you believe enough in the use case, well, then,
wouldn't you think?
Aren't there? So wouldn't stocks who don't have dividends out there not have intrinsic value either?
Well, they would still have a book value, but I mean, obviously, bondholders are much more protected than equity holders. Equity holders get wiped out all the time with these things, right?
Huh. Yeah.
But yeah, like if it pays a dividend, it's certainly better. If it has earnings, it's certainly better. A company that has a book value could be, broken up and sold in pieces. Remember the movie Pretty Woman? Richard Gere used to do that.
Yeah,
take companies and break them up and
sell them off the parts. Thing, right? Yeah. Carl Icahn.
So that's the value proposition of, even Boeing that's had a lot of problems, it has, massive property and assets and
they can if they have something to liquidate, they have stuff to liquidate that has value. I get it. Yeah.
Right. But what does Bitcoin have? It has the cost to produce a coin costs a certain amount of energy. So you might say, well, one Bitcoin is kind of worth this much energy, but if there's nobody on the other side to transact with, does it have any value? I mean, isn't it?
Well, if there's no one to transact on the other side thinking that the American dollar is worth what it is, then it wouldn't have value either. It's a belief system. So the scarcity of it.
It's backed obviously by the good faith of the government, right? So Bitcoin at this point isn't.
So okay, right? So
it's not.
That's thinking short term though, because
I get it.
The American government's in charge right now. We're number one right now, but what about when we're not in charge anymore and some other country takes over, or it's a globalized world as far as a globalized government and not just America? That's where it comes into play. It's scarcity and it's computer code that takes away humans doing what humans do. We can't help but manipulate money, just like the American dollar. It's worth less now than it has been in the past. First, we took it off the gold standard. And, so now we're at where we're at.
What are your thoughts on that, Rob?
I mean, it certainly can be a form of money as long as somebody is willing to take it for goods in kind, right?
Well, that's what I mean, which is like, so the U.S. dollar, like it's backed by the government, this and that, but that's because everybody believes that it has value behind it ultimately. Like I had this discussion with a guy on Instagram. He said, well, gold is, money's backed by gold. And I said, well, that's because everybody collectively as a whole believes gold has value. What if people don't collectively as a whole believe gold has value? They believe something else does.
Right. I mean, but in this world of crypto, there's so much lack of authenticity in a sense that as soon as somebody, makes a windfall on a coin that's ripped up, what do? They convert it into fiat so they can go buy their Ferrari.
They have to.
Well, I know, but my point is,
if they didn't have to, they won't.
Well, as long as fiat exists and you can use it,
there'll always be some form of fiat. But my whole thought on it is, how about both of them working together? Because they're both going to need to coexist with each other.
I want to bring up something really quick. So you guys bring up good points, but it does come back to consumer confidence in most things. I'm saying the stock market, they got to be confident in economies globally. They were saying that they lost $6 trillion. So if you look at crypto, you have your people, right? You're going to have your group of people that believe in it. They got the NFTs and stuff like that they're selling now. But cash is king, and I want to bring this up. Running at altitude, we have somebody on here saying cash is king. Do you think it's going to be king for long? Do you guys think that this is, where we're headed with all this debt? I mean, it's a debt-based.
Let me say first that I do agree that cash is king, and you're absolutely right. Everybody, the whole point of making any kind of profit in cryptocurrency is to cash it out into fiat. 100% agree with that. So just want to state that for the record. What do you think about that, Rob? We're on the same page.
Well, I mean, price is a pretty good advertiser of where the convictions are, and the US dollar continues to climb over the last year. I mean, it's chugging up, and it's pulled back a little bit and then shot up again today. So it's still a flight to quality.
So it is, but that's because the belief system for the world lies behind it. Let me give you an example.
Well,
I mean
more than the belief system.
Well,
it's no different than Putin saying, hey, you guys, if you want oil, you're going to have to pay me in gold or in rubles. Okay? But so it's more than a belief system. Commodities are traded in US dollars primarily around the world. Okay.
Yeah, because that was our bet for taking us off the gold standard.
It's more than a belief system. A belief system is like, I think the weather's going to be okay today.
So it's backed behind stuff, yes, but everybody collectively as a whole believes that it's backed by the same stuff.
Well, I'm not saying that there can't be a problem in the future, and I'm not saying that we are handling and managing our currency as the world's reserve currency in a proper manner, in a responsible manner. I'm not saying that at all, and I'm not saying that we probably won't end up with one global government and one global currency one day. Okay, I firmly believe that we will, but again, it's a belief system. It may or may not happen. But right now, I know that I can go into my bank account. I can take out, $100,000 and go out and buy a car if I want to. Right? Somebody will take it. Right?
Absolutely, and that's a valid thing. I guess what I mean more than anything, which is at the same point, you're saying that the dollar's stronger than ever, but 20 minutes ago,
I'm saying
it's pretty strong compared to last year. It's on the up and up, something like that. So, but at the same point, like 10, 15 minutes ago, the discussion was that we've printed more money than we know than we can, and that's going to come back. I mean, we've printed 80% of all of our money in the last 2 years. Yet at the same point, the world considers us the best or one of the best currencies right now. Within the same sentence, we've printed 80% of our currency in the past 2 years. Like that says something right there, man, about.
Well, no, but other countries have done essentially QE as well. They also printed, right? So
that's my whole point about fiat and governments propping up currency.
So it goes back to this. So the question is,
it doesn't make sense.
The question is why would somebody invest into crypto right now in today's world? That's the question. And should you or should you not invest into it based upon it following the stock market and the numbers that you're seeing in the declines? What do you, I mean, is that?
I think you should. Go ahead, man.
He's the crypto guy. So I'll tell you, I'm not necessarily the crypto guy. I'll tell you why I would be interested. Okay.
Okay.
Yep.
I would be interested in having some diversification into crypto coins and crypto assets as an alternative asset class, as a protection, as a way that if, for example, if we have something go terribly wrong with all the systemic risk that can happen in the financial system and so on, if there was a banking holiday of 7 days and you couldn't get cash, you couldn't pay this, you couldn't move money at all, you could still use crypto, wallet to wallet or whatever. So there is some case for a defensive posture. But as a speculative asset that's going to go to 100,000, I don't know if it's going to go to 10,000 before it goes to 100.
You're absolutely right. I do agree with you on that 100%. And I would say that I would own far more stocks than I would cryptocurrency. And that's coming from a cryptocurrency guy. It's smart.
Yeah, but why is that? Because look, there's a lot of people that lost money in the stock. I'm not saying that the stock markets are bad, but you're saying outweigh the stock market versus crypto.
Okay. I mean, I just think that I think you should invest in both, but I think you should weigh more heavily with the stocks than you should on the cryptocurrency. And that's coming from a cryptocurrency guy. That's just to be smart with your money.
Go ahead.
And to your credit, stocks have proven to be a good way to fight inflation. And I mentioned on the show last time, as long as inflation stays ahead of the rise in interest rates, we could be okay in the stock market and other assets.
Yeah.
And maybe the best asset is, like we mentioned, single malt whiskey or something. I don't know.
Well, okay, so let's say that somebody's out there and they're like, you know what, I just want to think about getting into maybe investing in a cryptocurrency. Is there certain cryptocurrencies that have a potential to maybe move higher in the long term?
Yes.
I mean, look, Ethereum's out there. Everybody always says the main one.
I would say
you're not gonna make it a big score off of these, right? In the future,
Well,
you could, but right.
It depends how you want to look at it. So if you want the safest bet, I would take the top 10 cryptocurrencies and I would study why they're the top 10 cryptocurrencies. And most of them have very good use case scenarios, if not somewhat of a business behind it or a future business behind it. And those are the currencies that are worth the most and are going to have the most value down the road and are going to exist. Ones that actually have use case scenarios and actually have businesses or can have businesses behind them. But if you want to talk about the most profit, like even if Bitcoin went to 100 grand right now, it's at what, $36,000?
Yeah, but let's not talk about Bitcoin. Everybody,
Okay,
let's talk about this though. Let's talk about a cryptocurrency that's just
let me
getting
finish.
started.
Yep, I will. So let me finish. So if we're not talking about Bitcoin, let's talk about another one that's only a year or 2 years old. Like Avalanche is one of them. Okay, or Solana is one of them. So.
What makes them better though? Like why? Like not better, but why would you like
their use case? So Solana, you basically does the same thing as the Ethereum, but it's quicker, it's cheaper, and it's a lot faster.
Okay, so explain to the audience what does Ethereum do? Like what is the purpose?
So the whole point about Ethereum is why it actually, and this is what I'm talking about, is you have a bunch of cryptocurrencies and coins out there, but ones that actually have real life use case scenarios. That's why Ethereum is so popular, because you can put smart contracts into them. Smart contracts are basically an agreement written in computer code. So you have any sort of agreement or contract or whatever you have in real life, you can write that onto a computer program.
Right.
And you can put it on the Ethereum blockchain. So it's a blockchain where you can actually do real life businesses on it. That's why it's so popular. But the problem with Ethereum was when it was created in, I think, 2015 or 2016, is that cryptocurrency and blockchain was so far behind then compared to what it is now, that Ethereum wasn't built to handle the volume that it's dealing with right now. So all these NFTs and all these smart contracts of other properties are now being used for Ethereum. Let me give you an example. An NFT, a huge NFT community came out with land that you can now buy to go along with that NFT. Point I'm saying this is...
Yeah, I know who you're talking about.
Yeah,
yes.
Right, Bored Ape Yacht Club. They spent $100 million in Ethereum gas fees this past weekend minting those. Minting those means basically bringing them onto the blockchain. So Ethereum, basically the people who mine Ethereum, these are the people who do the work to verify the transactions to get it through the blockchain.
So listen, what you're saying though is hold on, Solana.
Yep.
and also Avalanche.
Yeah, so
Those are the ones because they have a purpose behind.
There's a couple others, but
okay.
The ones you'll see in the top 10, they have their blockchains. They have actual real life use case scenarios. That's why. So Solana does the exact same thing as Ethereum. You could put smart contracts on there. You could put NFTs on there. You can use it the same way that you can use Ethereum. But instead of costing $70 to do something with Ethereum, it costs you 2 cents to do with Solana. Instead of taking a half hour to get over when you transfer on Ethereum on the blockchain, it only takes 5 seconds.
You got anything to say to that, Rob? I mean, you got any other additions to that?
Well, I mean, it's kind of like Ethereum is more like, copper, and Bitcoin is more like gold. Like there's not as many use cases for gold, and there's a ton of use cases for copper. And so I agree with him that Ethereum just got so expensive with the gas you have to pay for all these
it's stupid
dApps and transactions, and even when you convert one currency to another.
So I had $70 in Ethereum in a wallet that I wanted to convert to another wallet. It cost me $100 to convert $70 worth of Ethereum. Think about that,
buddy.
Yeah, I know. How stupid is that, though? Is that it's supposed to be technology, but when it was invented, it's so slow.
Yeah.
I mean, it was the first.
The other concern, I mean, I'll talk to you. You're more an expert, but the other concern I had with ERC20, which is the protocol behind Ethereum, and 95% of all the digital apps that are on that blockchain are created on the ERC20 protocol. I just thought when I investigated it, it wasn't as secure as ERC71 or some of the others. And so do you think that there could be, since we've had so many apps built on ERC20, is there a systemic risk problem that something could really melt down somewhere?
I don't know what to tell you. There could always be something coming up. We're kind of an uncharted territory with it. Ethereum,
is Solana a lot safer in terms of its construction?
Well, so here's the problem with Solana, which is it goes down. It's gone down. The network has gone down. It just went down last weekend for like 4 or 5 hours.
Thing, right? It's a volume thing.
Yeah.
Right?
Yeah. I mean, so that's the problem, which is Solana is there to basically do the same thing as Ethereum, but quicker and cheaper and faster. But the network has gone down. If you actually want one coin that's more solid than any of them, that's been around since day one, Litecoin. I know like 3 or 4 members on the Litecoin Foundation, and Litecoin does the same thing as Solana and Ethereum as far as you can do smart contracts, and you can do now starting to be able to do NFTs. And it's never gone down.
Originally, CryptoKitties took Ethereum down for a while.
Yeah. Dude, they used to give those away for free.
So let's talk about.
I mean, isn't that crazy? In 2017, you could have been given a CryptoPunk or a CryptoKitty for absolutely free, and now they're worth like $40 million.
No different than buying pizza with.
Dude, yeah, right. Stupid, man.
let's talk a little bit more about other. Let's keep moving on this. So let's talk a little bit. So that's the 2 that you have. Is there anything else that you would recommend out there? Because look, why does somebody believe in crypto? It's just because it's a belief system.
Well, one that I'm invested in right now is Proppy, that blockchain transaction, real estate transaction form that I use for my transactions. So their cryptocurrency, I mean, I'm invested in that because I think that Proppy is just getting started with putting properties on blockchain and everything, and they're leader with it in the world right now for people who do that. So I have invested in that one. Link, which is like an oracle that brings real life material basically to blockchain. Link, here's the way that I put Link, which is, remember back when CDs first came out and the whole thing was to burn your cassette tapes onto your CDs? And there were people who did that for a living. You took your cassette tapes and you could burn that music onto your CD, so you had that music now on your CD. That's basically what Link does. It takes the old world and it brings it into the new world. So it takes real life data and information, but it connects it to the blockchain and puts it on the blockchain. So that's a real life use case scenario.
Yeah. Well, I got a question here. So I have a question about from running at altitude, and he said, "Can we expect interest rates to come back down to help stimulate the economy?" What do you think about that, Rob?
Do you think that the current market conditions will encourage the Fed to hold back a little bit more? Because that's the argument, right? I think, they've already said that the next two meetings are half a point each. So, that takes us into August. And so then they could do a quarter, maybe in September, or a quarter in December or something. So I don't know that they'll stay at the 50 pace, but they did promise the next two meetings are 50 basis points or half a point, right? So, I think they have to put the brakes on inflation. So, if people are being hopeful that, we're going to have an easing in that case, I think that's misplaced belief. You got to understand how far the market has come up. Like, if you just go back to the start, where were we before all of the stimulus started? Where were we before we, had interest rates that was zero pretty much, right? And real rates actually were a bit negative when you look at the corporate accounts and stuff like that. So what if we pulled back all the way to that level? Where would we be?
What was it like then? I don't know. It's been 2 years ago. It seems like it was 10 years ago, to be honest with you. I can't remember what the market was like pre-COVID.
Yeah. Well,
I mean seriously, what was it?
If you go back to, say, even before we had COVID start, we still had, pretty favorable conditions and a lot of stimulus going on even before COVID started. And then, of course, they ramped it up after that. But let's go back to where we were just before that. So the S&P was around, say, 320. The SPY was 320, 325, somewhere in there. And we're at 413 as of right now. So, I mean, there's still plenty of room. I wouldn't be surprised if we were to keep falling, that we would retest like 350 on the SPY. So, there's lots of room to go back down because the rally was created by so much stimulus.
Yeah.
So you're saying that we have more room to come back down and we can still lose more, is what you're saying.
There's so much of an air pocket still. It's not even funny. I mean, go back to 2000 when we had the big bubble, the internet bubble, and then when we rolled over, like, what did it?
The .com bubble.
Yeah, like, I mean, it took us from 2000 and where let me go back farther here. It took us from kind of 95 was the big rally up to 2000, and we retraced 2/3 of that down into the low in 2002. So
retraced 2/3.
Two-thirds
Damn!
of the entire. Just to give you some perspective, we came from about 40 or 50 on the SPY, and we built all the way up to 155 on the SPY, and then it retraced all the way back down to about 80 on the SPY. So, half to 2/3 of that entire move we gave back when we turned over. I mean,
can't go broke taking profit.
When people have less available resources to throw at the market, when the sentiment changes, when companies have disappointed them, all the speculative stuff, the SPACs and blah blah blah. When all that starts to change, you pretty much have a buyer strike. And if you have a buyer strike, people aren't willing to come in at the same level or take the same risk. Liquidity is worth something. The reason that the U.S. stock market is been so robust and kind of desirable worldwide is because of our deep liquidity. And what I've noticed is the liquidity is there on the ETFs. These are exchange traded funds. But I don't see the same degree of liquidity on many of the stocks. Like, it's just evaporating. And this army of retail traders has really been handicapped significantly. I know some stats. I don't want to quote them on air, but people that used to have, say, $3,500 in their trading account now have $240 in their trading account. I mean, it's been that bad in just this relatively small pullback that we've had in the last few months compared to what it could still do.
Was that from GameStop?
Well, I mean, maybe they built up some capital with some of the memes if they were lucky, but many people had struggles even with that. And then, of course, when they start hodling on things that are pulling back, and they double down and they hold, well, they get wiped out largely.
Man, if you ever go to Reddit and read that Wall Street Bets section on Reddit, that's where they talk about like a lot of the meme stocks like AMC and GameStop that got the prominence from nothing was because of this basically chat section in Reddit called.
Yeah. Well, I mean, hey, anytime you have a winner, you have sort of this survivorship bias idea that everything else will work out as well. So remember, Amazon.
You're absolutely right about that.
Amazon was one of the few that really made it from the .com thing, and there was many failures.
Oh. We lost them. Well, that's crazy.
I didn't touch anything.
Don't know what happened. We had him on there.
He's still talking right there, dude.
No, he's cut out. I think we lost his connection.
Oh.
So anyways, let's talk a little bit. We'll have to bring him back on here in a second. So your situation with the stock market and what's going on, do you actually invest in the stock market right now or not really?
Right now, I'll be honest with you, I have a little bit in the stock market and I have a little bit in crypto, but for the most part, I'm just chilling in cash.
I see.
I don't know, man. I don't care what I see or what I'm hearing, goods or bads. I just see a lot of things happening with the market right now. And, you could easily make a case that it's going to swing up as much as it's going to swing down.
Yeah.
But just my overall belief on we've printed so much money in the past 2 years and we've just given away so much money that nothing in life is free.
Yeah.
And in order for us to truly be healthy, I mean, look at this housing market in the past 2 years. This is stupid, man.
Yeah. I agree.
It's absolutely stupid. I mean, you and me both have buyers, multiple buyers around 500 that we're trying like hell to get into a house. That's absolutely stupid, And I just think that sooner or later, things got to come back around, and in order for things to truly get healthy again, we've got to go through a bit of a drought. We've got to go through a little bit of a recession. I don't know to what extent, because I don't know how much the government's going to intervene or not intervene, but I think that it would be healthy for us to get our ass kicked a little bit here and get back to normal.
So, you look at the rates, mortgage rates, and I want to talk a little bit about that just because I know what's happening in the world with this, the bonds and also Ginnie Mae, Fannie Mae, Freddie Mac. So they're suffering right now. And we see rates go up in a very, short window. We're over 6%. People think, well, is that for everyone? No, it's not for everyone. But we're probably... for a lot of second home and investment properties out there, we're not getting pricing.
Well, you were telling me about that. I remember I had that buyer, right? And you said, you called me the other day and said, hey, are so-and-so still going to buy that second home? I said, yeah, they're coming to town this weekend. And you said, what? Man, the interest rate for a second home for investors right now, they don't want investors right now.
Yeah.
They're trying to do everything they can to discourage investors right now. And the only way you can really beat them right now is to have cash.
It's 100%
because they don't want secondary homeowners. So,
what do you think about that, Rob?
Well, I didn't hear what it was. So
sorry,
so
the rates went up. We're over 6%, and when you look at the rates where they're at today, I would say, I mean, that's not for all the programs out there, but I feel that people think that rates are going to keep going up. Are they ever going to come back down for mortgage rates? We talked about the bond market and Ginnie Mae, Fannie Mae, Freddie Mac, secondary homes and investment properties. You have to almost pay down. It's almost like a high cost loan because you got to pay so much just to get the rate. What do you think is going to happen to you? I mean, you have any idea what's happening with the bond market?
Well, I mean, it can be a long cycle like we've seen in previous cycles. It can be a long cycle before we circle back. Or it could be another, catalyst comes along and causes the Fed to have to start, backing down or start lowering interest rates again. So anything's possible. We're but the longer we get trapped in this, where people can't handle free money, the worse it becomes next time, and the worse it becomes next time.
Agreed.
So, it's called the age of infinite moral hazard is what happens, and we're kind of trapped in that. So people have to have some austerity, and nobody likes that. As soon as you're forced to have
100% agree with you, man.
Squealing, and it's like a stuck pig or something, right?
Yep.
So it's tough. Human nature is we want freedom, we want it easy, we want comfort, we want this, we want that. Anyway, a big problem. I was saying that just like they use the Amazon model of success to justify all these other things, I think the success of GME caused people to be drawn into the next one, the next one, the next one, the next one. And the problem is it's never like that. You don't have 100 work out like one.
Yeah.
And the problem, it's amazing to watch some of these comments on these chat rooms, like you mentioned, Reddit and other things. Social media, and they do not understand the short side. They want to blame everything on the shorts.
Yeah.
And then you look up and they're whining about something. They're saying, let's squeeze these shorts. And you know what? There is no short interest on the stock.
No, right? I was going to say, that's why I brought up that Reddit, Wall Street Bets to begin with, was for that reason right there, is if you go on that page, man, and you read these kids' comments, they're delusional, man. Like, they have no idea of reality, and they think, oh, diamond hands is what they say. Diamond hands, I'm going to hold. And these kids, they'll show those screenshot, and they'll have, first of all, they're like 19, they have like 100 grand. How the hell they started out with that, I don't know, but you can tell they don't value it, because this shit will be down from like 100 grand. They'll screenshot it, it'll be down like 8,500, and they're like, diamond hands, I'm never selling. And you're like, dude, you can tell you're 19 and stupid. Because if you had a family and you'd worked your whole life, you wouldn't be that way with your money.
I mean, what do you think?
I mentioned on the show last time that volatility tends to shorten your time frames, your investment time frames, and we're seeing a lot more people have to reposition and rethink and reevaluate and so on. So yeah, if you have completely disposable cash, sure, let's take a 50-year time frame. But if you've got to make something out of it and turn it into something, and you want to protect it because you can't actually afford to lose it, then you got to be more nimble. Yeah,
they're 19. They're not 45 or 50 and have 2 kids and a wife and, hey honey, sorry I can't make the mortgage this month because I was acting like I was 19.
So getting into that situation, I mean, is there big pops? Because we've seen this market, and people think there's going to be a dip in the housing market, maybe in the stock market, waiting to buy when this dip actually hits the bottom. Do you think this is going to keep going down for both housing and also for the stock market, Rob?
I just think that we're seeing, we're seeing some trouble in the bond market. We're seeing trouble in the stock market. We're seeing the beginning of some trouble in the housing market. And so a lot of it is just connected to the context of what's happened to get us to the heights that we did in the market, the heights that we did in housing and bonds with, interest rates and so on. So as that changes, let's call it a regime change. So under this new regime change, what are the arguments to sustain, the bull side versus, looking at the reality of some of the bear side? I think you have to do both.
Agreed.
Yeah, I mean, so for me, I just look at it and go, well, if all these markets are not doing well, I mean, everything can't keep going up.
That's the way I look at it.
But it's like there's not one sector that's feeling the pinch right now that we see, and I think that's just the concerning part of it. That every single, and maybe it's the economic, we were just
they're all
so
related
hot.
Though.
Well, listen, we were so hot so fast, and I agree. Globally we're related too, but now it's like, well, people think, well, this is it. We went straight up. Now we're going to come straight down. Is there a point where we come down, but then we stop?
Let's call it the toilet paper trade. Okay. Let's call it the toilet paper trade. So I go to Costco and I realize, man, people are having a hard time getting toilet paper. I think I'm going to buy skid loads of it, and I'm going to be out in the parking lot, and I'm going to sell it for, 3, 4, 5 times as much as I bought it for. what happens when all of a sudden that supply chain is unfrozen and the toilet paper comes flooding back into Costco?
Means everybody can get toilet paper again, and you're out of
I'm
luck.
going to have enough for my whole life, and I'm not going to be buying toilet paper anymore, and I'm certainly not going to make anything on my investment, right? So
other than writing a book on that toilet paper, you're not doing anything.
So whether you want to position yourself for scarcity, if something changes with that scarcity, let me throw out something that may happen. Okay. Everybody's been hard pressed with all the supply chain things and, all that. And so there has to be reposturing, changing this and that. And so let's say that many of these areas, they get ramped up, and in a couple of years from now, all of a sudden we have a massive flood of goods. But in that context, there's not as much velocity of money anymore. You could actually shift from having this sort of real inflation to sudden and severe deflation.
Yeah.
Right? Think about.
Well,
You're absolutely right.
Let me say this though. You can answer it. Are we in stagflation? And so stagflation, you know what that is, or I can.
You know what it is.
Okay. Well, I'm just saying it's basically when an economy slows down, and you have high unemployment, yet we have tons of people employed, supposedly by the numbers. You don't know how true that is, but then the inflation continues to keep going up. I know they just raised the half point. The Fed did, so to slow the economy down. But is that a problem, right? Is having inflation keep going up and our economy slowing down, and really people just holding on to their money and not doing anything with it, right? That's not a good place to be, right?
I mean, if they're spending money, okay, let's say that there's a resort in Fiji that everybody wants to go to, and it used to be, $2,000 a night. Now it's $18,000 a night. Why? Because of the demand, and it's the scarcity, and the people have disposable money, and so they can jack prices up and so on, right? So there's still supply and demand through everything, and I think that if there's lots of jobs and there's good paying jobs, and the employers have to pay more to have staff, then they've got to raise their prices to make the same revenue to pay the staff, blah blah blah. And so you're caught in that cycle of prices going up, right? And I don't know at what point that shifts. I'm just speculating that in some areas we're going to go from scarcity to abundance. And when you go to abundance, it's deflationary, not inflationary.
Because we're flooding the market with too much of something. It has no scarcity anymore.
So if somebody's out there though, and they're just looking, they're probably holding their money. A lot of people lost money in the stock market, and the reason I'm bringing this up is now they're just holding they're just not doing anything with it, and they're just going to sit on it until they feel that they're comfortable. When does that level of comfort actually come back into an economy usually? Because I feel like we're starting to enter that where everybody's like, well, this is unhealthy. I'm not doing this. Costs of goods are too high. When does that mindset shift for people?
That's what I'm doing right now. Just chilling on the sidelines.
What about you? I mean, have you seen other people, Rob, that you've gone through this process? When does that mindset shift where you start to feel like, okay, now we're hibernating a little bit with not doing anything, maybe not traveling as much. People are like, oh, well, I'm going to really strategically, plan out my trips. I'm only going to go to the store one time a week instead of, everybody gets that opportunity, right? Entitlement. Now it's different. So when do people's mindset start to shift on, okay, I'm hibernating. How long will that take for me to come back and say, okay, it's back to normal?
Yeah, I don't know when the transition will happen. I mean, people are already making choices of going to no name brand versus,
oh yeah,
the designer brand, things like that. I mean, there's lots of different choices that people are making because they want to make their dollar go a little farther, right? So they're experiencing the fact that, a dollar doesn't buy as much as it did, a couple of years back. That's the reality. So they're going to make changes, and that's going to slow down the velocity of money. And so it's part of helping. That's why interest rates get raised. Mm-hmm. It's part of helping reel that in. And if it keeps slowing, it does put the brakes on inflation.
So why did they do that in 1981? Why did they raise it so fast? Like you said, it went up 10%. Like, why not just do it today and do that and just kind of like, okay,
People are too sensitive
we
today.
got a line here.
Well,
It's true though, right?
If you did it like that, if you just suddenly came out shock and awe, you'd have household wealth, be cut by 2/3.
Yeah, dude, people couldn't handle it.
In a day, right?
Yeah,
absolutely.
So
and the consumers. I mean, part of it's too. Part of it's political, as the whole world's gone political.
Mm-hmm.
Part of it's that, and like, can you imagine? Like, look through all the world and people, protesting in the streets and all that. What is it always related to? It's related. We can't afford to buy wheat and soybean oil, and we can't afford this and that, and and so they riot and they do things. So to keep the peace, you have this, transparency. You have this, here's what we're going to do in a metered and fashion, and I'm just not sure that it's enough or that it's early enough. I think it's kind of late.
You're in another country, right? So you're in Canada, correct?
Correct. Yeah.
You are?
Yeah, he's in Canada.
I thought he was here in Vegas.
Yeah, he's in the next room over.
Dude, you're in Canada? I didn't know that.
Work with.
Nice, eh?
Yeah, he's in the next room. You can't hear him?
I didn't know he was Canada. Wow, that's crazy.
No, but so I want to say this.
One of the firms I work with is in Vegas. So
yeah, yeah. So are these people in Canada? Are they worried? Are they fearful of like what's happening in the economy and things starting to get too expensive? Is it happening the same way where you guys are at?
Yeah, I mean, you're starting to see more for sale signs go up. I mean, one guy I just talked to, he had it listed for $3 million and he sold for 500,000 over ask, so 3.5 million.
Are you in Toronto?
And so we're still getting over ask. There's more and more signs starting to go up. So they are starting to think about, hey, because Canada usually is behind the U.S. The U.S. goes first in the rallies and in the corrections, and then Canada follows within a year or two. It's always behind. Yeah.
Are you in Toronto area?
No, I'm in the Vancouver area.
Vancouver, okay. When you're talking about those prices, dude, you want to talk about expensive ass real estate? Canada.
Yeah.
I'm serious.
So is there really money to be made in the stock market right now? I mean, look, so we can kind of delve into a little bit more into this on future shows, but are people still confident in the stock market overall with all these drops that you see in points, or are they just pulling out and putting it into the bond market or other areas?
Well, I think most people are going to probably try to hold through it, because here's the thing: we've been trained that everything kind of comes back, right?
Mm-hmm.
I mean, even the 2020 dip there in March, we went down really fast and we came all the way back, right? So I'm sure there were people that got spooked and blew out. And then they have the problem of when it did reverse, they missed the rally. So that will train them. That regret will train them. Like this time,
you're absolutely right about that, man.
There's a lot of people out there that don't know about stocks and like how it really works.
Train them.
My thing is this: is there something that people can look at, or something you give, or you can help with if somebody's trying to get into investing into stocks? For the more of the people that really don't understand the process of it, and then what to invest into, because it's like a foreign language. People really don't understand it. You got to really be in it every single day, right? That's what you do, correct?
Yeah, like I said to you before, we're more production based, meaning that you just trade every day and you trade, things that are moving, and volatility is kind of your friend, and you're largely hedged. So, for example, I'm showcasing on this company here. It's mystockodds.com. I'm kind of trying to teach people, and you can do this over various time frames, but I'm doing it on a very granular level to help people learn something. You can have a basket of long stocks. So we're doing like a top 10 basket of long stocks, just in the S&P 500, which is, where most of the better companies tend to, reside. And it produces the list, and you can buy that list for the day and hedge it by buying an ETF that protects your downside. So I'll give you an example. Today was a pretty bad day, right?
Mhm.
I'll just rattle off what the markets did. The Dow Jones was down by the close, and it was down a little bit more, and it came back a bit. So it was down 1,063 points, or 3.12%. So again, on a percentage basis, it's still not massive, but 1,000 points sounds like a lot, right?
Mhm.
And then the Nasdaq, which is more all your tech, your big tech names, but including things like Moderna and stuff like that. So you have still a very broad mix, but it doesn't have the financials in it the same as the S&P or the Dow would.
Mhm.
So it's more tech driven. And that was down 4.99%. So 5% by the close, down 647 points, which is quite severe for that index. And then the SPY, or the S&P 500, that was down 3.56%. So kind of sandwiched in between the two, the Dow and the Nasdaq, and that was down 153 points. Okay. Now, the top 10 in the S&P 500 it had a little bit of alpha over the market if you just were long. So the market went down, the long stocks went down with it, and that's what generally happens. People have to realize that there's hardly, in the S&P 500 today, there's hardly a green stock anywhere. Okay, they're all down.
Yeah, I saw that heat map today.
So the list performed just slightly better than the S&P, but if you were hedged, you were profitable.
Yeah.
And that's what I'm trying to teach people is if you need to lower your exposure, you need to lower your risk. And if you lower your risk, you can increase your returns over the long sample.
Yeah.
Okay. So it's partly data, and education is really what this company is all about. Helping teach people and then providing the data so that they can be more self-sufficient and trade for themselves, or take longer time frames and invest for themselves. Now, this would apply to the crypto area too. Try to lower your risk. You can trade pairs in the crypto space. You can move money to a stable coin if there's real concerns, USDC and stuff like that. You can do mining where you can earn some interest and stuff like that.
You can short Bitcoin too, like on Binance and all, and you can short it.
Right. So, but in general, if you just lower your exposure and your risk, you may not make as much money on any one thing, but over the long sample, you actually increase your returns. The same argument would be if you were playing in the blue chips with the dividends and all that, like in the Dow component stuff, versus the speculative SPACs and the new EV companies and all that, those blue chips have done better over the long sample. Because the problem with putting in a growth stock, when you're wrong,
you're really wrong. You take away any profit you ever made when you're wrong. You're absolutely right about that.
That's the biggest thing that people can take away from this is that you've got to think about risk first. If you're an investor or a trader, you are firstly a risk manager.
You're absolutely right. You're absolutely right about that. People don't understand
properties. If I wanted to go buy some fixer uppers, I gotta really look at that foundation. I gotta really look at the plumbing, because if you buy a fixer upper and you think it's going to cost you 50 grand to make this thing look nice, and you end up having to replace all the plumbing or the foundation or whatever, you're into it for 150,000. Now you just screwed yourself.
People don't realize that's absolutely right. It's about the greatest asset of trading is risk management. Yeah, by managing that, people don't understand how important that is. Yeah. It's not necessarily about picking the right stocks all the time. It's about risk management.
So we've been on here for an hour, guys.
And the same would be true to poker. I've hung around some of the good poker players, and it's the guys that know how to manage risk. And they also know how to press at certain times. Right. But the ones that are still around and have done very well, maybe a career living in poker, definitely a first to risk management.
So guys, we've been on here for an hour. I want to say, Rob, thank you so much for coming on, man. And how can somebody really find out about you or get a hold of you? I mean, you got that stock odds behind you, right?
Yeah, it's mystockodds.com.
There you go.
And just go there,
MyStockCards.com.
you can-
And
Yeah, they can if they want to make an appointment to meet with me on a Zoom call for 15 minutes or 30 minutes, I'm more than happy to do that. You can
Excellent.
book on my Calendly automatically, and we'll just have an appointment and meet together. So
Cool, man.
I'm
And
not
then-
an advisor. I don't advise you to buy this or that. We're in the education and data. Okay.
that's
Cool.
what everybody wants. Yep.
cool.
And Brett Jenny's the only. Is it the only still certified crypto agent?
No,
in
I don't
Las-
think I'm the only
Oh
anymore.
wow, you got taken over,
So
buddy. So-
I'm the first. You can't ever take away that title.
is there a new sheriff in town?
No one's overtaken me, bud. No. Just go to Vegas Crypto Agent at Instagram, and you'll see a lot of content that I put on there talking about Bitcoin and cryptocurrency and blockchain and the whole 9 yards. Vegas Crypto Agent on Instagram.
All right, guys, this is cryptocurrency. This is the currency factor here.
Thanks, Rob.
On Thursday. I don't know why I said cryptocurrency. This is the currency factor. We got Rob here. We also got Brett. We'll see you guys next week. We'll have more information as we get going. We're going to get this even better, more detailed. So, guys, please tune in next week, and we'll see you guys. We'll see you then.
Thanks,
Thank you
man.
for watching the French
Thanks
Working
a lot. Take care.
Podcast.
Thanks, Rob.
You can find us here every Tuesday at 6 p.m. and
I wanna
Saturday
talk to
mornings
him
at
more
10 a.m. to find out all the information
That was your
on real
fucking
estate
all.
financing here in Las Vegas. Also, check us out on our LV Home Professionals website. You
Gotta
can find
take
your
a
future
leak.
home there. A lot of good information, and you can find us on
Another
audio-only
successful
options
run.
through SoundCloud.